GM, just a quick one before we get going. So, as you know, the Blockmates podcast is for informational and entertainment purposes only. Certainly shouldn't be considered as financial advice. We have absolutely no idea what we're talking about half the time. So, any investment decision you do make should be based on your own research and your own understanding of the risks involved. One more thing as well, there's around 50% of people who listen regularly who aren't subscribed yet. So, if you please could just do us a favor and hit the subscribe or the follow button or the like button, helps content grow, helps us grow, helps it reach more people like yourselves, and it means the world to us as well. So that's the last I'll ask of you. So yeah, let's get to the episode. All right, we're back live. This is episode, I'm not even going to make up which, as if I know which number episode it is. It's definitely over 200. I'm running two podcasts at the minute, so I keep getting them mixed up. But we've got the one, the only, Huff, one of my OG friends in the space. Probably known each other for 2 and a bit, maybe getting close to 3 years now, which is like a lifetime in this industry. So how does it feel to be on the other side of the mic for one?
Yeah, it's great, man. It's less pressure now. I just got to talk and not ask any questions. So
yeah, if anyone doesn't know, Huff runs I think it's up there with my favorite podcast in the space, Crypto Narratives podcast. Was I on the earlier iteration of that? It was a different podcast that you were running previously, but if you haven't listened to that, go and give it a download. I'll leave all the links in the description for that. But yeah, how are you getting on?
Dude, it's been crazy. I think it's been over a year since we last had an hour-long sit down and catch up. But yeah, the markets keep me definitely engaged and excited. And I was just saying to you offline, we've got a little office space now in London, built the team up. So it all feels like it's going in the right direction.
And we both survived, it seems. I don't know how, but we did.
You know, I always think back to something that you said, which was when we did record that podcast 2 and a bit years ago. You said one of the mistakes you'd made in a previous cycle was just to keep buying the dip, thinking this is it. And that really saved me over the past 18 months, because there was just a period of time where I was like, I'm just going to start a business instead of messing about with the markets. And so I do probably owe you hundreds of thousands of
pints.
Pints, yes. I was going to say Argentinian pesos, but
no, I know. As I say, it's been. I think I've came to the conclusion. I'm just gonna have a bit of a different strategy this time around and take. I don't know what this arbitrary number is. Maybe 10, 15, 20% each month. See what my profit and loss is at the end of each month. Take 20% off. Give it to the missus. Keep it out of sight. And then, when all said and done, I feel like it's the time to sell. I'm just going to take 80, 90% off the table. I did that this time around, and then just kept chipping away because I was getting bored. So if I can stick to it this time, it might be a little bit better.
But that's a real thing, dude. One of the things I really enjoy about being on the conference circuit is you're kind of away from your screen, and you realize that some of the trading you do is just boredom trading. You're sat there, you're looking at it, so you might as well participate in it. And it's a real kind of thing to overcome, to be just put that aside and be like, okay, what do I want to do in this industry outside of just clicking buttons?
Yeah, do you get much time to spend in the markets now? Obviously, with PEAR, you're probably going to have to be. It's going to be two-pronged, isn't it? You've got the product, and then you've also kind of got to be extremely aware of what is actually happening in the market.
What I say to people is I'm a trader first, and so that was my professional career. I did that for a decade in the bank, and then even now, though I'm a founder of a decentralized exchange, I can't not keep abreast of the markets just because I love it at the same time, right? So my interests are to read Masari research. My interests are to read things coming out of yourself, from Blockmates or Blockworks or wherever it might be. My interests are to read The Economist, on a Saturday. That's what I choose to do, to go to a cafe and read The Economist front to back. And so it's very hard for me to not stay abreast of markets. So I like to say I'm a trader first, but obviously as a builder, it consumes a lot of your time. I see them as complementary. It's by no means do I sit here and look at charts all day, but I do participate in the markets, and I think it's complementary, to be honest, to have some skin in the game.
Yeah, it's kind of amazing that we're in the position to actively pursue something that definitely doesn't feel like work. And you probably wouldn't know. Honestly, someone asked me the other day, what would you be doing if you weren't doing this? And I was like, fuck knows. I have no idea. Something to do with football. I like football, so I'd probably lean into that and figure it out. But honestly, I'd have no idea.
There you go. We're turning this into a like philosophy podcast. What would you do if you weren't in crypto? Just anything you enjoy.
Self-help podcast. That's what it should be. We should pivot. So what's going on with PEAR? Give people like high level if they're not aware. If you're not aware, then you might recall, if you listen to the recent episode with me and 563, we did a top unreleased project towards the end of the year that we released that last week, and I actually didn't collude with 563, one of our lead analysts on this, and he kind of brought you guys up. So I was like very, very happy to see that. But kind of give everyone like the high level, and then we just pick the bones out of it, I think.
Perfect. So crypto trades off narratives, and crypto volume trades off narratives. Over the past few weeks, that's been the ETF narrative, and you've seen Bitcoin outperform pretty much a lot of the major alts, especially things like ETH. That's the inverse of the narrative that has been at play, which is the flippening. So ETH outperforming Bitcoin. And then you've got various degrees of these narratives, right? Like decentralized compute and things like Render and Tau more recently outperforming certain benchmarks like ETH. You've got other narratives like LSD-Fi and things like Lido and Rocket Pool earlier this year outperforming other assets. And then even within meme coins and more thematic things, you've got Pepe outperforming Doge at points in the cycle, then Bonk outperforming Doge, etc. Now, one of the ways to capture these narratives in a much more risk-adjusted manner is to pair trade, because often in crypto, what happens is people think, "Oh, do I want to be long or do I want to be short?" And there is an alternative way of trading, which is available to any investor. It's just not currently maybe on their menu, which is this idea of being long and short at the same time. So you long one asset and you short the one that you think it's going to outperform. But right now, if you want to do that kind of pair trading, let's say you want to be long Solana and short ETH, you have to go to a SEX, first of all, somewhere like Binance. You've got to open an individual long, open an individual short, post margin against each leg, manually close the trades, manually calculate your P&L, keep on top of funding rates, blah, 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 blah. And so for a myriad of reasons, people don't really pair trade at the moment, even though it's a highly profitable way of trading in a very kind of risk-adjusted manner, because even if the market goes up or down, you could still make money as long as Solana outperforms ETH. And so we looked at this problem and we interviewed like maybe 40 plus professional traders, so pro-tail and retail traders. And they all said the same thing, that pair trading, either on a SEX, and it's pretty much very difficult on a DEX, is a pain in the ass. Now, I know this myself because before founding Pear Protocol, I was running like an on-chain fund, if you will. And our two most successful trades were narrative trades. Around the time of the merge, we went long ETH and short Ethereum Classic. And around the time of the FTX collapse, we went short Solana and long pretty much anything against it. We went long Atom. And so I realized you could make a lot of money pair trading. But there's no way to do this efficiently. And so we built a pair trading platform on chain. It's on Arbitrum, and we're on Arbitrum mainnet. We're in a closed beta with about 100 odd people. And the idea is very simple. If a narrative starts to form, you can choose the asset you want to be long. Say you want to be long Solana, choose the asset you want to think it will outperform, say ETH, deposit your stable coin as collateral, USDC, slide up your leverage, because pair trading classically is all about leverage. People don't do this to make 1 or 2%. They do it to make multiples on their capital, and then open your trade, all tokenized as one trade. And so that's what we've built at Pear Protocol.
Awesome. Yeah, I mean, I love the idea of this in many ways, more than one. Is the idea that everyone in this industry is hell-bent on a narrative. It's so tribal, it's so conflicting. And the beauty of this is you can actually just go and put your money where your mouth is. And there's so many conflicting communities which it'd be a very, very good co-marketing effort from you guys to kind of tap into that if you actually wanted to go down that route. But like, how many times have you seen Ansem speaking about the Sol ETH pair? Like, come on, like you couldn't get better marketing than that. But
and he's one of our advisors, like full disclosure. He will be one of our advisors when we go to launch.
Well, it's interesting because me and Jerry interviewed him probably over a year ago. And I just kind of got the inclination that he was always, the way that he was tweeting stuff, that he was definitely looking at how do you outperform your base of your portfolio that you hold in, and then like really playing the rotation game. So I asked him about pair trading, and you probably find it on the clip. So it's interesting that you should say that, because he said he's just heavily into it. Like, if there's going to be a pullback and you want to keep your longs open, why not just short freaking Bitcoin against it or some shit like that? But that's a really good kind of asset to have on hand if he's going to be an advisor. He's a great dude.
We shout out Z. We like him a lot.
So what so you said the 2 trades that you took with the fund, but what else has been like drastically outperforming of late? Is anything apart from the Sol ETH pair that you've seen that's maybe have caught people by surprise?
Yeah, so I think the way to think about this, right, is narratives. And so you've got like a RWA narrative, and one of the most liquid ways of playing that is Chainlink. And Chainlink not only has this fundamental story behind it with everything they're doing to bridge real world assets on chain and provide an oracle for that, you've also got this technical aspect to Chainlink outperforming the market, which is it's broken out of this kind of 2-year accumulation range. And so you take the two of those together and you're like, okay, look, I want to be long Chainlink, but the market's quite frothy at the moment. I don't want to just be outright long after like a 70% rally. And then you look at something like Bitcoin, which is just trending sideways, or ETH, which has been frustrating for a lot of ETH holders. And so another trade to put on might be just long link short BTC at these levels, right, at a certain point in time. The Solana trade has been one pair trade which has done really well. Another one which we've seen people come to the platform to do is, in a testing environment, is playing the narrative of self-custody. And this idea that things like places like Binance and the BNB token have probably peaked between 2017 and 2021 in terms of how much people trust them, how much volume is going to go through them in percentage terms relative to a DEX. And so we've seen people do trades like long DYDX, short BNB on the platform as well. Ultimately, whenever a narrative comes around, let's say EIP 4844, you want to be long things like Arbitrum and Optimism, and maybe short something which is just not used and overvalued, like Ethereum Classic. So you want to be long those kind of proof of stake layer 2s or whatever it might be. And where we're going with Pear Protocol is to make this fully narrative trading. So in the example of EIP 4844, rather than choose a winner between Arbitrum and Optimism or Matic or whoever, you could actually just be long a basket of those and then short a benchmark against it. And so we're really trying to build this out in a way which is super easy for users to understand. Whenever we meet VCs and investors, they always say the same thing: how are you going to acquire users? How are you going to acquire users to this? And I think the pitch is like somewhat simple. We've got to make the platform, the UI and UX, super intuitive, such that in a market that's trending sideways, up or down, someone can just come in and say, hey, look, hearing lots of good stuff about Matic. I think Solana's peaked for a while. I want to be long Matic, short Sol. In fact, 2 of my favorite influencers have said the same thing. I'm going to click these 2 buttons. And that's the way we're really building this thing out. The narratives change every week, and I think that's one of the best things for us from a volume perspective, is the way that we source our liquidity. We can spin up, or rather users can choose permissionlessly any 2 assets to be long and short in any permutation that they so choose.
Yeah, I was just about to say, I think as much as this is a kind of an infrastructure product, I think there's also the element of you get the design and the UX on this right. That's your kind of killer product, I think. Like, I was speaking to who was it? So the guy does the marketing at Smiley, so the kind of volatility trading kind of platform that's coming on. And they are like looking at ways to kind of make their product a little bit more seamless for the average user, and they're wanting to like look at mobile first and all this good stuff. And he said the way that they were trying to like demonstrate the product was making it like a swipe left or right if you actually wanted to take on the trade. And he said like it's probably going to be the closest thing you're going to get at trading meets Tinder. I said, that's great because no one on CT's got a girlfriend, so they'll immediately get the product anyway. But like again, these kind of products, like you get the UI UX right. I think that's like a huge part of the battle that's completely overlooked for the majority of protocols in the space, I think.
Yeah, and it's tough for me, right? Because my natural instinct as someone who's traded is to have like a super busy trading app. And I want it to look like this institutional trading app. I want it to show the correlations here and the beta between these two assets and this technical analysis. And you're going to lose so many people if you start going off on one about that kind of stuff. And it's great. And like, I think it has its place. And for the more advanced traders, we will provide tooling. But we're really trying to build something here where retail are getting screwed trading perps, right? Like there's entire businesses held up just by people clicking 100x leverage long and short and getting liquidated. And the market makers love them. We haven't seen much traction for these like range bound products or like whatever they might be, just because they're a little bit boring under the hood and they don't really speak to a retail investor. And so we thought, okay, how do we take this topic of narrative trading, build it in this simple, usable way, and ultimately the end goal is people should come to Pear Protocol and make money.
Mm-hmm.
And I genuinely believe that we're unlocking a financial instrument here, i.e. the tokenized trading position of the pair, which will allow people to sleep a bit more comfortably. Because if you put on a high leverage long or short trade, 90% of the time you're going to get liquidated. If you're putting on a highly levered pair trade with cross margining between the two legs, the chance that you get liquidated is much, much lower.
Yeah. So what's actually like? Have a little look under the hood. A little. What's actually going on there? Like, are you tapping into like where's the liquidity sources for the pairs? Like, can you just give us a bit of what's happening on the back end there?
Absolutely. So there's a distinction between version 1, which we've built, and version 2, which is coming. So version 1 we've built on top of on-chain dexes, and so we're sourcing our liquidity from there. So we've built on top of GMX and on top of Vertex. Now, if you come to the pair front end, you select a narrative that you believe in. Let's say Bitcoin's going to outperform ETH. You select the asset you want to be long, say long Bitcoin, short ETH, and you will get that trade, slide up your leverage, you will execute that trade. Now, we have an isolated margin product which faces GMX, which means you can have higher leverage, but the risk that you get liquidated is somewhat higher because your collateral is not being shared between the two legs. And that's a feature of GMX. The benefit of using the GMX product is obviously we have access to their liquidity and we can tokenize your trade as an NFT, which has all these composability benefits. You can transfer it across wallets, you could borrow against your position, you could even sell your position on somewhere like OpenSea. The other way that we source our liquidity currently in V1 is we've integrated with Vertex's SDK and their order book. And so if you were to go long Solana, short Matic, you would put on those two individual trades. We would tokenize it on our front end, so you don't see the two individual trades. And the cross margining, because it's native to their trading engine, applies to your trading position. And so our liquidity over time in V1 will come from every single perp dex on Arbitrum, where we've deployed first. So you could think of Pair like a front end optimized for narrative trading, sourcing its liquidity as an aggregator, if you will. V2 is a lot more interesting because in V2 we're utilizing this intent-based model, which I'm sure you're familiar with. So we're white labeling that. We have access to about 180 underlyings, and myself personally have been involved in getting a few market makers on board there to really scale that business. And so how that works is with a whole bunch of market makers and solvers on the other side, which is a really good use case for intents. Pair trading is a really good use case for intents. Because my personal view is if someone wants to buy an ETH perp, they can go to DYDX, they can go to Binance. It's like easy to do. But the more bespoke your request, the more need there is for an off-chain solver. And so we're trying to build the front end for that. And to take the example of Solana-matic again, everybody might want to trade that in different ways. Some guy might want to trade Solana-matic with 7x leverage. They might want to put DAI as collateral. Well, an intent-based framework is great for that, because the solver can come in. They can say, okay, look, I'm going to charge you like a half decent spread here, but I can hedge it pretty easily. Another guy might come in and be even more advanced and say, look, I want to go long Solana, short Matic, 5x leverage, USDT as collateral, but I want to pay a net funding rate. So pay funding on one leg, receive funding on the other of 1%. And if it comes out of that range, please close my trade for me. And then a third user might come to trade Solana Matic and say, I want to go long Solana Matic, I want 20x leverage, I want to use USDC as collateral, and anytime the beta goes like 60-40, I want you to take profit on my long and reallocate it to the short, right? And a solver can come and do that. And so what's really exciting for us in V2 is we get our liquidity from market makers and solvers, and we're building it in a manner which, despite all the criticism of intent-based architecture, there's a real use case for, which is like bespoke on-chain OTC trading.
Yeah, it just feels like this kind of convergence of two kind of great ideas like coming to the market at a particularly good time. Like, and I've listened to so many kind of great product guys that say timing is everything with these kind of stuff. So you were kind of restricted to what was kind of already out there. Maybe even 12 months ago, like without even Vertex being there, obviously you'd have gains and things like that. But with the way that what we're seeing internally with the way that intent-based protocols are going, I think it's probably just going to shoehorn itself in there, maybe as the go-to standard. What was quite telling for me, which I've said a few times on here, so forgive me if I'm repeating myself, but the same week UniV4 was announced, where that looked like they're basically offloading the AMM design space to anyone who wants to build using their infrastructure products. They also announced Uniswap X, which is an RFQ system for spot. That to me is them hedging that the AMM model is never going to go like any further than what we've kind of took it up to at this point. So like if these guys are looking at it, who are like the industry leaders, there's definitely something to be said that it could kind of instigate itself as kind of the go-to mechanism going forward. So, and I think you guys are going to be in a very, very good position to capitalize on that.
Absolutely. And the other thing is, right, Uniswap are not stupid. Like they see who's providing liquidity. And there are institutional market makers making up like 60-70% of the volume, right? One in particular on some Uniswap V3 pairs. So what difference does it really make?
Exactly. Exactly.
It's just much more efficient for them to hedge off-chain in that instance. And then my personal view, and I was speaking to Levy of Intent X, who I'm a fan of on my own podcast, and we were talking about this whole like decentralization thing, right? And a lot of people get upset because Uniswap X are introducing these like off-chain solvers, and the like really strong criticism is, oh, you're building wrapped version of Binance, right? And he made a really good point, which I agree with, which is people are working on different problems. You've got the people in the governance forums hyper focused on building decentralized tech, right? And it's a theoretical exercise to a large extent. And then you've got other people who are like, look, there are hundreds of thousands, if not millions of people trading on Web2 sex platforms. They are getting front run. They are getting liquidated left, right, and center. They're trusting these places with their keys. We saw what happened with FTX. Like, is it that bad to go to Web 2.5 and build a solution for them? Because they're not coming to Web 3 to trade because it doesn't make sense.
I think it's a great answer. I mean, Jerry's going to do a live stream with the Intent X guys, but I think it's very wise for people, if they're just hearing about this for the first time, to really go and understand it and wrap your head around it and kind of make your own mind up on it, because you're going to be hearing an awful lot of it over the next however long or moving forward in the industry. But so how much can you actually tap into, and how much are you relying on where you're getting, and I know you're very, very good at this, and I think this is one of your strong points. Like you yourself, you can pick up on a narrative a lot earlier than a lot of people. And if you're going to be tapping into like newer people who are coming to the market and want to put on a pair trade, and you're teaching them through this mechanism of how to trade, where are you getting the information from to build up a case for a narrative? Or are you strictly relying on what you're seeing from the flows to then build like a product or a basket around that, or a suggested product or basket around that specific trade? Because are you just doing it purely off experience, flows? Is there some social scanning that you could do to kind of build up a, like, say for example, AI trade at the minute? Like where's the idea for the specific narratives and baskets of trades that are coming from?
Great question. So first of all, Pair is a permissionless platform, right? So anybody can come and choose an asset they want to long and choose an asset they want to short. It's not the case that we're creating pre-created pairs, if you will. The second thing is how do you like decide which asset to long and which asset to short? And here education comes in a lot, because it's one thing to look at sentiment analysis on Twitter. It's another thing to look at fundamental research through some of the written research reports that you write and some of the tier one kind of publications. And then it's another thing to look at narratives just based on like going to conferences and talking to people and seeing what people are doing, right? Ultimately, we're going to build out an education course, which step by step runs you through like the idea of pair trading and knowing what to be long and knowing what to be short. And it's going to range from in complexity. So it's going to start really basic and be like, look, you want to pick one asset that you think is going to outperform the other asset. Let's go long and short. And then it will go over time into some of the other deeper considerations, like what is the correlation between these two assets? What does the pair tend to mean revert? How can you chart that? What upcoming news events and catalysts are there? Are there any unlocks and all of this kind of stuff, and really build like an ecosystem around pair trading? That's what we're looking to do. But in the first instance, for us, like me personally, how do I find narratives and how do I trade on them? It's really a mixture of fundamental and technical analysis.
Yeah, because it's an interesting one, isn't it? Because sometimes I think me and 563 were saying the same thing, and we're doing a segment where it's like when we were doing the top unreleased projects, and he said to me, he was like, I think we need to just take a step back and actually have a segment in that episode of, well, how did you find them? Like, what was the process? Because we probably just take it for granted that we're doing this all day, every day, and we manage to be speaking to the right people, or we know where to look, we know how to stumble across these kind of things. But I think sometimes we probably underappreciate how much we just take for granted in the knowledge space of it. Whereas someone coming in fresh, all I'll hear is, well, how do you spot an emergent narrative? How do you know that that's going to be a narrative? And it's like one of the like really big recurring questions that we'll get in like Discord, or people are like coming to for advice, like how do I stop being late to the party? So it's a weird one, isn't it?
Yeah, and I'd often like caution, if people are talking about it on Twitter, like everyone's talking about it on Twitter, you're somewhat late to the narrative, right? Which is a sad reality. And one of the best indicators is if not a lot of people are talking about it, you're either like way too early or you're in that kind of sweet spot. How do you jump on the narrative early enough? I mean, ultimately, there's going to be some element of like not knowing and uncertainty. Like, who really called, other than DGen Spartan and a few others, the LSD5 thing in Jan, Feb, March? Not many people. And it was
And it
really
ripped.
like should have really happened around the time of the merge, but it
Mm-hmm.
didn't. And so you see these like delayed responses. I personally, the way I would go about doing this is I would research like a really small curated list of 5 to 7 things within just 2 or 3 different niches, and then really dive deep into those, and you'll get a sense, a pulse of which of these narratives is starting to really form based on everything that you keep on track of. one of the mistakes a lot of people do is they've got like a list of 100 tokens, right? And then they keep adding to it, and there's no way to like have your finger on the pulse when you're not getting deep into the weeds on anything.
No, and you know what? I've tripped myself up a little bit. It's not horrendous, but getting out of the bear cycle PTSD where you could be holding something completely against macro headwinds and you can talk yourself out of a thesis very, very early. And then again, as soon as everything's turned not too long ago, it's like you'll pick up a position and be like, yeah. And if it doesn't move and you see everything else moving around it, you're like, invalidated thesis. And then you leave it a week and you were just early. And it goes and does like some strange like multiple. And it's just like, it's really frustrating because it's that transitionary period of the last 2 years have been terrible. So you're kind of still in that mindset. And then you just got to give yourself a little bit of breathing room when you're picking up like trends, particularly if they're not moving whilst other things around it have been doing like super well, you know?
Yeah, it's tough. Like I'll give you a great example of this, right? So in June of the bear market, I was researching about decentralized compute. So things like Akash, BitTensor, all of this kind of stuff. And I'd read the Masari research reports. I'd gone to a couple of conferences in August, September, and I was like, this is going to be huge. Right now, everyone's talking about ChatGPT and OpenAI back in the summer. Why is this stuff not taken off? One of the best indicators here, right, is if it's difficult to buy, sometimes it's a bit bullish. Now, the reason why these things hadn't taken off is because you had to go to Osmosis on the Cosmos chain and buy a cash network, right? Or you had to go to like only Mexi and one other place had Tau listed. Now you see perps coming up left, right, and center on it, right? But if it's difficult to buy and there's a fundamental reason to buy it, that's often a good indicator that you can you might be slightly early to the narrative and you don't want to go all in at one point in time. You can slowly like buy 10%, 20%, 30%, 40% of your allocation. And then the inverse is true. When Pepe or Bonk gets listed on Binance and it's everywhere, that's probably the time to sell.
Yeah, it's a funny one, isn't it? Because all my chats were talking about like 3 weeks ago was Tau, CAS, and like these very obscure assets on obscure like tier 2 and tier 3 exchanges. But I was like, yeah, this is the kind of thing that happens. And like obviously they've all gone on a huge tear now. And as I said, they are plastered all over Twitter. So be very careful if you're going in. It might be a little bit frothy at the minute. But there are just like these undercurrents of like narratives that I struggle to put kind of a term and a ceiling on them. Like the AI narrative, I don't know what that looks like expressed in like relative market cap terms in the crypto markets. Like, does render tend to move because Nvidia moves, and it's like a way for people who have only got money on chain to express that desire to gain exposure to that asset? You know, it's like, I don't know. It's just a strange point in the market where there's these things that until we've seen the likes of ChatGPT and like look at WorldCoin moving because Sam Altman's been sacked and he's like getting hired from Microsoft or some shit. And that's what people struggle to kind of wrap their head around, like these short bursts of like WorldCoin moving off the back of like this ridiculous news. But because it is such a narrative and sentiment based market, people just want to express that there is some kind of focus on this specific area or this specific person. And then how do you go and express that in the market? And then WorldCoin's up like whatever it's up to do. It's like people coming into the market this for the first time. That's I think what they struggle to wrap their head around a little bit.
It's tough to predict. But at the same time, if you're part of the right Discord communities and like one or two Telegram groups, often the smaller the number of people in there, the better it is. But test your thesis as well with people, right? And be like, hey, I see all this news about Sam Altman. I'm looking at the chart of WorldCoin. What do you guys think? And it's amazing how few people will go and source the opinions of others to do that. I'm in a group chat. I'm fortunate enough to have been in this industry for a little while, but with some like really good traders. And whenever there's like a narrative forming or something, I will ask in there. Now, not everyone can be part of the same groups, but like it's good to build a group of people around you where you share your thought processes. Because I think where a lot of people lose money is it's just them and their trading system or their investing system. And they're not running their ideas past anyone. And that's, if you take the TradFi analog, no TradFi firm works like that. If you go
No.
to any major hedge fund or any like big big fund of any kind, they'll have a team of people and they come to some kind of consensus, and then they go with that consensus with conviction. And I know it's really tough, but like build your tribe in this space, and then it will filter itself over time because you'll realize who's just like a moon boy and who actually has some educated thoughts about the space.
Yeah. So what stage are you guys at now? Like, what's next on the agenda for you guys? Like, when token? Can we go into token? Is that even a thing? Like, what's next?
Absolutely. So we've just completed a closed beta of version 1 of the product. We got some amazing feedback from 88 unique wallets, and we implemented a lot of the changes. So people wanted certain features, like they wanted to be able to save their chart layouts. They wanted to be able to have advanced trading tools like seeing the breakdown of each individual leg, and managing the collateral of each leg, and a few other features. So we added those features. It took us about 3-4 weeks, but we added not every feature that people asked for, but the ones where there was like some consensus building. We now, today on the 20th of November, looking to release version 1 of the product by the end of the month. Version 1 of the product will have access to at least 20 underlyings. So that leaves you like about 340 pairs that you can trade, permutations of pairs. And then we'll get the audits done. Version 2 of the platform, with the intent-based architecture that faces solvers and market makers for more bespoke requests, that will probably come towards the end of the year, if not January. And our plan is to have these two platforms, version 1 for the people that just want to trade on chain, they don't want any off-chain components, they're very happy to trade in that manner. Version 1 will be live by the end of the year, and we want to hit certain KPIs. Version 2, similarly. And then the way our token model will work is the PEAR tokens at the heart of the ecosystem. It's got a hard cap of 1 billion tokens. You buy the PEAR token, you stake it, you don't need to lock it. You can unstake at any time, and you'll receive 80% of all the protocol fees. So like a revenue share kind of token system. Also, if you buy the token, you will get fee rebates and fee reduction, as well as some kind of governance over the protocol too. And so the token launch is a little bit market dependent, but we're looking to do that in Jan-Feb of the year. And it was really important to us when we spoke to all these tokenomic experts and even looked internally in the team. Most projects don't need a token. So we only really wanted to launch a token if there was going to be some utility to it. And the main utility here is the revenue share.
Yeah, it's an interesting one because DYDX keep getting tortured online because they've effectively been earning on these fees for God knows how long, and nobody's seeing anything off the back of them. And then I think even locked DYDX tokens are going to be able to become part of the validator set on DYDX chain. So it's just like further dilution for people who are trying to buy from the open market. But that thing could be a beast.
It's a joke, man. Sorry to like go off on one. I love DYDX in the sense that their trading platform works like pretty well, and they've built some great tech. And I've done like decent volume on it over the past 2 years. But their Twitter posting of like, we protect our users with our insurance fund. I'm like, you've got a 9 million insurance fund and you've pocketed like 100 million in fees for yourself. That's not something you should be like masquerading, or you go and spend like 250 grand on a night out in New York for everybody at the Boom Boom Room. Like you're bragging about the wrong things, right? On chain, like a 9 million insurance fund goes very quickly in this space. And just I think some of their attitude just stinks, to be honest. Like they have so much arrogance that people just aren't going to warm to, right? And when they move to their new chain, sorry to like go off on one, I think they're underestimating how many people will bridge and go to a brand new app chain with like significant amount of money. Because it's one thing having $1 million on Ethereum secured on layer 0 and trading there. It's which you can withdraw back to Ethereum mainnet in one click, versus going to this brand new app chain and bridging across and all of that kind of stuff. And so, yeah, what you said about locked equity as well is just, it's a bit tone deaf.
That's exactly the heart of the majority of the issues. It's just like the lack of kind of self-awareness. It's probably they're just so high on their own supply of just making absolute millions hand over fist, and then it's like the same thing that's kind of happening with uni, where it's just like, oh yeah, it's just a governance token, and then just go and implement shit left, right, and center without without ever going to governance. It's kind of crazy, but yeah, I don't know. I'm just rooting for kind of you guys and Vertex and see what Intent X and things like that can do. But I think it needs a bit of a shake up there. You know, there's only a certain amount of times where public facing people who've came out and been a little bit too kind of forthright in the space, and it never tends to end well for whatever voodoo reasons. But yeah, they've their PR behind it's a bit funky at times.
It's arrogance, right? It's just born out of pure arrogance. Like, if tomorrow, heaven forbid, Pear Protocol was to take like a loss on some kind of insurance fund, I wouldn't be trying to meme my way out of it.
No, absolutely not.
And that's where it's like a little bit tone deaf.
So is there any details around TGE, or is not yet?
So I think timing wise, we're looking at Jan, Feb. We'll probably do a DEX listing first. We'll probably do a stealth listing as well. So we'll keep it kind of under the radar. And if you were like part of Pear Protocol and following the story and whatever, you'll be a lot closer to that. Which rewards the people that were there. We'll have some kind of anti-botting mechanisms and things in place. And then we're actually talking to a couple of centralized exchanges about the metrics that they need to see to do a SEX listing at some point in 2024 as well.
Sweet. Is there anything else interesting you've seen in the market before we wrap up? Like, is there anything that that's piquing your interest?
I think it's a little bit late now, but the whole BitTensor thing is really interesting. I've heard them talk at 1 or 2 conferences, and I think they're the right team to pull off what they're doing. I think that things like Optimism, which had this like wave of interest after Base got launched, and it's now kind of dissipated a little bit, will have a second wave. Especially with EIP 4844. And to my point about narratives and people not talking about it, I think the EIP 4844 thing with ARB and OP and others, the whole kind of layer 2 scaling thesis is probably going to come back into play at some point, sooner rather than later. What else do I have my mind on? I genuinely think there's great pair trading opportunities in this market. I think being long link versus short, some kind of benchmark against it, not even a benchmark, but things like Litecoin that haven't really moved. And there's no volume, to your point about flows. Being long something link and short Litecoin is like a great kind of passive trade to have on. What else narrative wise are we looking at? I just think decentralized exchanges are going to get very interesting. So like you said, with Intent X, there's a huge pie of volume that DYDX currently have. Where does all that volume go? Does it stay on DYDX v4? Maybe. Does Synthetics win some of it? Does Vertex win some of it? Does Intent X and others win some of it? I think that's really interesting. And outside of that, buy Bitcoin. I genuinely think if you look at flows and you look at how little supply there is on the order books, even if BlackRock go and buy OTC, which won't be as they won't pay as much slippage that way, you're still going to see like a massive dearth of supply of Bitcoin. And it doesn't take much for institutions to write 10, 20, 50 million spot tickets on an ETF. I've seen it from my own experience. But those kind of flows into Bitcoin, man, they'll they'll kill supply. So if you can just own some core spot Bitcoin, I'd definitely do that, and you don't need any leverage for that to work out for you.
There you go. Well, Huff, thank you very much, mate. I appreciate it. And an open invite if you ever want to come back on, if you push a new product, just let us know and we'll do it again. But yeah, best of luck. If I don't speak to you, have a good Christmas. I think we're going to do something in the new year when I head back over. So, but yeah, thanks for jumping on.
I'm preparing my liver already.
You fucking need it with us, lot.
Yeah, it's very true that you put some British guys in a room together and all they're going to do at Christmas is drink.
Right. Any links that we talked about, that'll be in the description. Henry keeps shouting after me for not remembering to ask people to subscribe. We're getting some decent numbers coming in on subscription, but we have also noticed that there's like 50% of people who listen that don't subscribe. So please just do us a favor. Take 2 seconds. Huff, speak to you next time. Take it easy, everyone. Bye.
Thank you so much, mate.